The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 28th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can call right now, 877-927-6648. Of course, internationally, 727-445-1044. You can always send me an email, just as Jim did and Peter. So we'll take a look at their stock selection. So you too can do the same. Steve at TFNN.com. Hey, in the heading area, put big, bold, put like Trader's Edge, the name of the show. Put Mastering Probability. Put something out there so that it doesn't get lost in all of the other junk mail that I get, probably just like you as well. So if you could help me out there, that would be great. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 34 points at 20,946. S&P's off 3 at 2385. NDX 100 up 15 points, trading at 5586. Russell 2000 is struggling today, down 12 points. The semis are off 16 points. Semis the biggest percentage loser indice-wise to the downside, about 1 6/10%. You've got gold up $2. Silver is flat. It's really down a nickel, trading at $17.27. Lightspeed crude not doing much. It's up 20 cents, trading at $49.16. The big dollar winner to the upside is Google today, up $38. That's 4%. That's a big move for it. Regeneron Pharmaceuticals up $23. That's 6%. Align Technologies is aligned to go higher, up $17 or 14%. Priceline is up $16. Amazon is up 14. Royal Caribbean Cruise Lines, they're cruising. They're traveling down the Emerald Seas, it looks like, $8.56. The upside, 8.5%. To the downside, you've got Athena Health. ATHN's the ticker symbol, off $21 or 17%. Pretty decent volume behind the move, 4.5 million shares for it. SVB Financial, that's down 7%. That's off $13. Alliance Data Systems, ADS, off $13. AutoZone down 12. Ellie Mae Clampett down $11. O'Reilly Automotive off 9. Baidu down 7. So we've got some things that are moving to the upside and to the downside. But first, let's go take a look at what's going on intraday out here. And we'll just start off by looking at the QQQ series ETF. We talked about this yesterday. We've talked about it on many occasions. When I say talk about, just take a look at a couple of different patterns that are out here. Well, actually, when that move after the bell last night came in with regard to all the earnings, not all, but many of the earnings inside the NDX 100 out here, we saw a big, huge up spike, big, huge move out there. Now, as I was doing that, it actually got to a seventh wave. In fact, that's the actual high at this stage during that candle session. But the reality is all the price has done is traded with inside that candle for the most part ever since then. Now, this is the second pullback that we have seen thus far. And what it did is it formed this little TD setup 9 count out here. That's the actual low so far. And we know that when that bar trades into the bars 5 and 6, doesn't have to be both, 5 or 6 really is what I should say, then that tells us that the price decline is losing steam out there. Momentum would say, bar number 9 is not going to touch bar number 6. Forget about bar number 5 out there. And so we can see that in essence is where price put in the low thus far. Now price is struggling on the bounce. It's gotten up to looks like the top of the box. Is that the top of the daily by the 30-minute chart out there? I'm not sure. Let me do this. Yeah, it is, as a matter of fact. Well, that says, how about that? So the bottom, I just noticed this now. The bottom of the box, 5577.73 is the reading here. You've got both the center and the bottom. That says that's pretty strong support level, but it is struggling to get over resistance. Things won't, price won't move and close towards their session highs today unless we see the NQ get that price oscillator to start rising. Now, in order for it to do that, as we speak right now at 1:11 in the afternoon, we need to see a close above 55.8670. If price inside the NQ is able to do that, I don't know when, at 3 o'clock the number is going to be different. But if you were to see that, then the NQ could go ahead and make a run for its highs. Likewise, if it doesn't do that and it closes below certainly the low of the session, or at least 55.77, we could see a continued sell-off. When I say sell-off, just simply some gains being taken after just what has been really a tremendous couple weeks out there. So I don't sense anything more devious than that, at least not as of yet at 112. The end of the day, which means over the weekend as I take a look at charts, maybe I'll come up with some other conclusion. But right now, that is the conclusion that I have. In fact, even in the weekend to see out here, if we take a look at, when I say week, really it's the Dow, right? That's probably being led by Intel and Microsoft to the downside. No real huge damage out here. If I look at the ES Mini, we've got a lot of folks that trade that. That's where you could go ahead and utilize this Tom to Mark system for sure, especially the old 9-pin out here, because you can see when that 9 count formed, just like inside the NQ at 12 o'clock out here, you can see that bar had traded into bar number 6. That was telling us that the move lower, at least lunchtime, was in order. Time to go get a few martinis if you are on the floor out there. Now, this box inside the ES Mini, by the way, I'll put it on my other chart out here. It'll be a little bit easier for you to see, a little bit clearer, I believe. So let's go ahead and put the ES Mini, the 30-minute chart. What we are going to see out here is the makeup of this box, which, by the way, just began forming at 1 o'clock. The structure of this box, that's probably a better grammatical explanation for what we're looking at. This has a bullish bias to it. And therefore, full chart not showing. Well, thanks, Mr. Bill. Hey, Steve-O, can you make sure that we've got the full chart showing out here? We want people to see this stuff. So if we do take a look at, I'll just describe to you at least what I'm looking at out there. And if I have to repost something, then so be it. But if we take a look at the structure of the current 30-minute profile, okay, great, it is. So maybe, Mr. Bill, you might want to check your system or something, because supposedly it is. But 23.80.18 and then 23.81.10, that's the bottom and the center of the box. So this suggests that the ES Mini ought to at least bounce to the 23.84 level. Be a slightly bearish message, again, from a directional standpoint when I say bearish, from a directional standpoint when I say bullish out here. And so if you close below 23.80, can't do it with 18 pennies out here, but 23.80, we'll just say 23.80 even Steven. In fact, 23.80, I think that's also an important number. I think it was 23.81 if I'm not mistaken out here. So you see it, if you see it close below that, yeah, 23.80.75. You know what? That says some further pressure come Sunday evening. So any close in the ES Mini below 23.8 and 3 ticks out there, that says Sunday could get a little dicey in the markets. Nothing major. Steve Rhodes with TFNN. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's get to a couple of the questions here that came in prior to the show starting. The first one from Jim. My apology there, Jim. Jim was asking if I could help him find a top inside of Amazon. Jim wants to go ahead and short a $900 equity. And so if we take a look at it, we'll take a look at a couple different chart patterns out here. This is what I see at the moment here, Jim. First, I see an A to B equals CD pattern. Now, I've got the conservative one up here on my screen. This, by the way, this is a monthly chart. Since it's the end of the month, and monthly data has more meaning than weekly than daily than some intraday time period out here. I just thought we'd go ahead and start at the top. And so we can see that. So what I'm using here for the A to B equals CD time period is a low that came in October 2014. Now, that low, by the way, was 284 even. Steven, you got to like that. That becomes your A point of the lightning bolt pattern. Price moves up into a high that forms in December 2015. Forms a nice little doji style candle. Does a 54% retracement out there, so about a 50% retracement just for a couple of months. So really a brief pullback into February 2016. That becomes our C point. Now, only 53% retracement says to you and I that this lightning bolt pattern is going to extend beyond the one-to-one. There's a lot of people out there that just take a look at the one-to-one, and then they just simply get trampled out there because they just believe that the one-to-one, that's it. That is not the way that it works out here. It's really important to be able to master this C to D leg. In fact, I'm going to help folks like yourself do that in about 3 weeks. I think it is the the 17th of May. I'll make sure I'll go get the date and make sure. And that's for newsletter subscribers. But that's neither here nor there. Here's what we know, Jim, is that we're above the one-to-one level out here, which was 886. The 1-to-1.272 expansion, and by the way, we use these as rounding numbers out there, is 998.62. So we're going to call it $1,000 is where Amazon looks like it is headed to. By the way, the B point was taken out with slightly more volume. So that's not as if, as on a monthly basis, not as if this is any kind of failure. So that's what it looks like. Now, What also is occurring out here, if we take a look at my other charting application, is through last month, price had been moving higher with less relative energy. So through March, that's the black diagonal lines on my screen out here. But we've taken that out. That is not the case any longer. So that so-called warning pattern, well, gone. The only possible other warning pattern is on that A to B equals CD that I showed you. If we just simply start our wave count from there, we could be in wave number 7. Now, that could not be confirmed until next month or the month thereafter when there's a lower high that comes in here. But more likely than not, it's really in wave number 2 out here. We can see a TD, or maybe you can't see it, but there was a TD sequential count that occurred back in, looks like December 2015, and that failed. Nothing more bullish than failed bearish patterns. Jim, looking at the monthly chart out here for Amazon, it says that it really wants to get to higher price. Now, I'll just change this over here to the daily chart and say, well, maybe you are seeing, and by the way, the mere fact that it gapped up and it is sold off, this is not a bearish candle. It just means some people are taking profits. That sounds like a decent thing to do out here. If we take a look at the daily charts, not until first, if you're going to short it, then what you need to see is this needs to at least get back inside 923.72. Then maybe, and I say only maybe, could this thing take a ride on the reading down to about the 857, 847 type of level. 886 really would be the next stop out there. But at this stage here, daily charts, I don't see it. In fact, on a daily basis, just to give you a feel here for the A to B equals CD pattern, the swing point that's been taken out thus far was April 5th. That had 7.5 million. This is daily. Well, we're taking out with lighter volume out here. It's taken out with lighter volume up at these highs. It's interesting. You're not really seeing a whole lot of selling, are you? No, you are not. In any event, Jim, I hope that helps you out with regard to Amazon and what Stevie sees. Let's go take a look at Peter. Peter had a couple of requests out here, really 3 requests. TWLO was the ticker symbol, Twillo Inc. And Peter is up on each of these stocks that we're going to go ahead and take a look at, and just was searching for a second opinion. So if we look at the daily chart here for Twillo, Peter, you're up yesterday. You actually closed above a level of resistance. That level was 32.38. Today you're trading out right now as we speak at 32.99. So that's a nice thing. The swing point that it's moving into, there's really 2 of them, a set of swing points. One from February 13th, 8.6 million shares. You're only doing 1.2 million shares so far today. So it's not exactly up here with enthusiasm. The other swing point is from 12/22. 2016, 11 million shares. So less enthusiasm as Twillo gets up to this level here. Now, I know you're up 10% or so on this. I would just go ahead and keep a stop in place, and I would anticipate that this thing's going to run out of steam here shortly. Is it going to get all the way up to 35.15? Is it going to get all the way up to 34.95? I don't know. You're trading inside those candle sessions, so it is a possibility. Could it take it out? It is a possibility. It's really in a consolidation. So that would be the bonus for you. Bonus round, you get to the bonus round if, in fact, price is able to close above, we'll make it the hard one out there, 35.15. Then if you do, or if it does, because I know it's really not you, if we're up to you, you would close above it. Then you have what is referred to as a measured move. And any close above that then is going to give you a price objective of somewhere around $44 and some change out there. But right now, I think the call has to be that you're running into some resistance without a whole lot of steam or energy. But nice trade out there. Just keep a stop in place, and maybe it just is some expansion of its average true range, which means the average open high to low during the last 10 days. Just add all that up, divide it by 10, and voila, there you'll go with the ATR. You might want to expand that number by 1.272, 1.618, something along those lines. The second equity that Peter wants to look at is Team. He is a team player, and that is at Atlassian Corp. How'd they come up with T Atlassian Corp team? Atlassian Corp. This is a nice looking equity so far today, yesterday, the day before, and the day before that, and even the day before that. So that's 5 days in a row that this thing has looked very pretty out here. Why? Because it got above that daily TAS market profile box. So that said, hey, no resistance from its horizontal levels, so to speak, out here. All we have to do is go back, take a look at the prior swing point that it's trading into, which had volume there of 2.2 million shares. Yesterday, you were up into it with a million shares. So this thing as well, and I don't want to use this terminology, but I can't pass it up. This thing could be petering out, Peter, when it gets to the 35.16 level. So what do you do here? Because this one you're only up 6%, only up 6%. Nice move, nice trade out there. We need to have some clapping in the in our fire up so we can congratulate all these folks. Now, ideally, price would close for you above 35.16.
Stay tuned, folks, because
and do it with more than the volume on that trading session of 2.2 million shares, because then you'd have an A to B equals CD to the upside. Let me go over to my other set of charts out here, punch this in on the daily basis out here. This is TEAM. Let me see if there's anything else that shows up, and if there is, I'll report back to you. No, I can report to you right now. The answer is no. I don't see anything on my other charts, but you're running into a level of resistance without volume again. Just keep a nice stop place on this trade. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Question inside the Tiger's Den here. I'll go ahead and share that with you since this is the chart that's up on my screen right now. Earlier in the morning, I had posted a chart, or I posted a number. I didn't actually post a chart. If I post charts while others are on the air out here because of my login and everything, I have found my charts override their charts while they're doing a show live. And so I just very sensitive as to when I post the charts. But I did write in that that it looks like the NASDAQ, I didn't even say it looks like, it said the NASDAQ composite will be at 64.79 by the end of this year's Santa Claus rally. And the question was, how did I come up with that number by one of our denners? And the answer is this chart right here. Now, this chart here takes a look at the NASDAQ composite. I go back, how far do I go back on this chart? Probably as far back as I have the actual live data versus dead data, of course. So I take that maybe not. This day I take this back to July of 1996. So what do we have? 06, we have 20 years worth of data. Is that what we've got? So in this 20 years worth of data, now the red lines, we're looking at a monthly chart, and the red lines on my screen happen to be monthly horizontal trading range boundary lines. Now you might say, what in the Sam heck is that? That's what I would say if I had never heard that before. And that's probably what I did say the first time that I heard it. And it was something that was popularized by our man Bud Rolfs out here. Now, he called them primary trading range boundary lines. And because the system that I developed, which is automated, is different in essence than in the way that Bud created his stuff, I don't want you to get confused out there. Of course, it is confusing. It's similar, but not exactly the same. It's like having a Canada Dry ginger ale, and then I don't know who makes a lousy ginger ale out there. I'm sure there is somebody. And Costco ginger ale. Do they make soda? In any event, out here, I don't drink soda, but every now and then maybe with some popcorn, in a movie. Speaking of movies, man, I saw a movie a couple nights ago. Just cracked the. I have not laughed so hard, and just a weird sense of humor. I think it's something like. What is it, All About Him or something like that? I don't know. In any event, let's get back to this chart out here. Why Him, I think it was. Yeah, that might have been here. I would have never thought it was a movie that I would have watched out there, but laughed. And it's a very good movie after a bottle of fine wine out there, or any kind of wine, I suppose. But 64.79 is the next horizontal trading range level. These horizontal levels, you can see how they do a good job of containing price. When price goes above one level, typically comes back, tests it, goes on in, basically hits the next area out there. If I put the weekly and the daily levels up here, you'll see that they're going to be different. And that's sometimes where some of these retracements come back to. But we have now cleared, or the NASDAQ has cleared, this 56.18 level was resistance. It's been tested, in essence. We take a look at the monthly chart out here. So, and it's right around the midpoint level. So 64.79 looks to me like where the NASDAQ composite wants to go to. Now, the Santa Claus rally is going to happen. That is for sure. This rally here hasn't stopped. There's no telling whether it will stop or not. And so that is how I came up with that number out there, peak. And I hope that helps you out. Now, let's go back because Peter had asked about one more equity. So we want to go ahead and answer all the questions out here. This one is MSBI, which is Midland Bancorp out here. Now, the problem here, Peter, is you've put me up to the challenge. And the challenge is this. This is an equity that just a couple of days ago only traded 16,000 shares and 28,000 shares and then 35,000 shares. If ever volume to a certain extent probably didn't mean a whole heck of a lot of beans out here, this really kind of could be it, because it doesn't take much in the way of volume to start to really push this equity around. And this is the one of the three that you have the least profit in. And so now, maybe you're trading it because you have because it's a local bank, something along those lines. So you may have some information that totally puts the technical piece out the window. And in that case, Eric, I can't compete with something like that. And I just would like to see something that's got some more volume in it. Here's what I can share with you that it's doing technically. It's really right up against resistance as we speak right now. We've got a bunch of these bearish candles out here, right in this 34.50-ish type range out here. This last one being April the 5th with 36 million shares to the downside. not a big, huge deal. But it does say that 34.55 level, we're trading at 34.45, is resistance. Now, if it can clear this area, and it may, there's only 30,000 shares today. It may. If it does, what I would be looking for, Peter, is to consider taking your profits at about 36.47. That's the top of its weekly box. That will also be getting you into its swing point from the trading session of December 27, 2016, 31,000 shares. If you stay in the trade, and price gets up there, and it is generating volume of more than 31,000 shares, stay in it, because price will go test 37.58. It may even clear that hurdle, giving you an A to B equals CD pattern to the upside out here. As far as support on this little puppy out here, boy. To keep a stop in place. But you'd have to argue that really support is probably a close below December 9th low out there, which would be $30.05. So I hope that assists you, and thanks for writing in. I'm going to go check the email requests here. It's just so easy to do it on my phone. Sometimes I don't see them, but I do like to get to each of your requests out there, and I don't see anything. So let's go take a look at, I don't know, what do you want to take a look at? Maybe some of the usual things, gold, silver, all those things. Oh, how about the GDX? You and I talked about this yesterday. Did we not? No, of course we did. Did we not? We talked about how how both silver and the GDX were giving us a signal that price was going to pause and that we were going to see some type of bounce. And my suggestion was, don't get too trapped into that bounce. You're intraday trader or so forth, different story out here. So let's go take a look at those charts. Let me go change to a different page out here. And then voila, that in essence is what has transpired, right? If we take a look at the GDX, is up 57 cents, 2.5% out here. In fact, let's look at it on this chart. Let's go take a look at some volume out here, characteristics. Let's get rid of that rising price channel that it broke through. So volume today, about 28 million shares out here. On this chart specifically, and this is going into the downdraft that had 126 million shares, right? So you had 126 million shares on April the 25th. If ever there was a classic timing the trade, setting up the C point of an A to B equals CD, the GDX is absolutely giving you that message as we speak right now. So why? Down on volume, up on vaporware out there. But if we go take a look at the other chart that said to you and I, said, hey, there is very likely going to be a bounce that unfolds out here. It was this. It was that price oscillator was getting right to the zero line. Now, you're going to see that it's slightly below, but we were looking at yesterday, right to the zero line, right where these three lines here were kissing and telling, right? They were telling us that at this stage here, price ought to pause, and that we should see price and Stevie's red line come together. Now, we don't know whether the red line's coming down into it, whether price is going up to it. We've got kind of a combination of both at this stage here. But if, in fact, price was able to take out that level, and I'm just going to go ahead and turn all those other lines off, make it simple. You can see the red line now is 23.04. That's what it is right now. But if the GDX can overtake that, I would change my tune. And then I would say, something to think about. Right now, it's nothing more than a little counter-trend rally and what may be a downtrend for a little bit of more time to come. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks out here. Let's see. Sean, maybe just send me an update. Okay. I don't see. Okay, I don't see any other questions out here. So the Dow's up about 38. S&P is down 5. We sort of covered gold and silver out here. You know, if you take a look at this Japanese yen, it's just still not it's not giving up. And this is the wild card out here. It's not really a wild card. It's not a wild card anymore. This is just communicating to you and I that the Japanese yen wants to go take on the 112.55 level, and price for the last 4 trading sessions really just kind of closed out at its center of that box out there, 111.08. Or close enough to it. This is a big Gartley buy. This is a big potential problem here for metals because that directional correlation is in effect out here, and it's had a nice move off of the bottom. Now, when I say a nice move, first it was confirmed with bullish candles. Then you had a gap up here on Sunday. And don't worry about that gap's going to get filled kind of a thing. Then a wide-ranging bar out here a couple of days ago, April 25th. And this is just screaming to you and I that it wants to move higher. Now, what kind of pressure is it going to put on silver and gold out there? Well, let me tell you. If it actually takes out 112.56, that's the real bummer out there for those that are gold bulls. If it takes out 112.56, then this starts to fulfill outcome number 2, maybe 3, maybe 4, because there's 5 outcomes in any type of Gartley buy pattern. So for those of you that just put the instrument aside, for those of you that are pattern recognition traders, and let's say this was just your chart that you were looking to get in on because there was a big move to the upside and you were looking to be able to buy it on a retracement, and you loved the Gartley buy pattern out here. Well, how would you have felt last week as this thing was confirming, you and I talked about it, was confirming the Gartley buy pattern out here? Where would you think that this thing might be headed to? Exactly. So now that, and we know about that directional correlation here. That's why this is such a, which means it's going to also put pressure on bonds. When this fails, if this fails out here, cool. Then you will have a bullish pattern that failed. But right now, after forming, it has not given us that look that it has failed. If I put the weekly chart out, I put the weekly chart up here. What's the weekly chart telling us? You've got a weekly. So this week here, you have a bullish reversal signal on a weekly chart for this Gartley buy pattern. It's very, very powerful. Not on what the monthly chart's going to look like. I don't think the monthly chart looks the same out here, but you almost have a hammer candle for the month coming into this wide-ranging bar. No matter how we slice and dice it, what the Popeil pocket fisherman or whatever it is, no matter how we do slice and dice this one, this looks like the yen wants to go ahead and continue to weaken and move higher. U.S. dollar would get a bit stronger out there, but that does not bode well for gold and silver. So until this picture changes, I say just be careful out there in metals land. Yeah, the Bassomatic. That's a Bassomatic. That was popularized by who? Dan Aykroyd and John Belushi, right? Yeah, of course. That just goes back a few years. Okay, what else? Well, let's go take a look at light sweet crude. Let's go do that. Let's go see what Texas T is doing out here, and we'll switch over to this chart. And what else? We'll switch over to Steve's synthetic charts out here and take a look at profiles. Yeah, I say why not? Let's go look at the synthetic version. It may not be different than the other, but let's face it, folks. This just looks basically downright miserable. Light sweet crude. There could be a bounce to 49.60. 49.60 being the 4-hour top of its box out there. That's this chart here. I'll go ahead and explode it. I mean, just enlarge it really on the screen. And when we take a look at this, you can see that the top of the box and the center, you can sort of see it, they're closer together. So the structure of this is bearish. Not until you see light sweet crude close above 49.60 can you suggest to anyone that there might be some type of bottom that had formed here. You're just seeing a little bit of a counter trend rally and what looks like a continued downtrend out here. That's really what you're looking at. And 49.53 is the 60-minute top of its box, and 49.60 is the 4-hour chart. So that should be some pretty strong resistance. But bottom line is, if this thing can't close above 49.35, daily chart is saying, Steve-O, I'd rather go test the lows out here right around the 47-ish range, which takes you back into the March 22nd level out there. That is what light sweet crude is looking like. The damage in the Russell. Let's go take a look at that, 9/10, and as well as the semis. Let's go take a look at that out here, see what's really going on. We take a look at a daily chart. So let me switch on. I'm already at the indices. So here what the semis are doing as we speak right now, they're just testing Stevie's red line. See how it's tested it, and it's just slightly rejected it out here. We're probably in wave number 3 off of the lows out here from a couple of weeks ago. So the pullback, although it seems large, as we speak at this moment, the price oscillator is still rising above zero. So it's just nothing more than a retracement that we are seeing inside the semiconductor, and that's the one that's had the biggest heat so far, and that's the daily chart that we looked at. If we go take a look at the Russell, let's go do that and see what it is signaling to you and I. Looks like 1, 2, 3, 4. Looks like today may be the 8 count in the TD setup out here. It just depends on the close, but this too, no big deal. Just a bit of a pullback. It would need to close below 1392.50 in order to get the hair on my chinny chin to stand up. But otherwise, it's just kind of normal. I think there is some pressure inside these financials, and that is what is putting the hurt inside of the Russell 2000. So Peak would like to go take a look at BCE in honor of the Stanley Cup playoffs. Did you watch those games last night? Pretty good games. I just wish that they weren't both on at the same time out there. But the Washington Capitals, at home losing against the Penguins. These guys just seem like I thought they were fortunate to go ahead and get out of that first round out there. And he did have an amazing shot. And I'm sort of pulling for Washington to break their jinx, so to speak, but good games nonetheless. Good games nonetheless, and Ottawa's a good team for sure. They're all good teams out here. In any event, the question was, could we go take a look at BCE Inc.? And as we take a look at it, right now it's trading out at $45.30 out here. What this did a few days ago with volume, it just ran right smack dab into resistance. You and I would not have known about this resistance had it not been for our good friend John Logan out here, who created these market profiles. They're a thing of beauty out here. The top of the box was 46.31. We knew that before price got up to 46.31. How do you like that? Now, in this case here, it's not as if this weekly profile has a bearish tone to it. So, and the volume was up there. BCE is headed back there. Whether it can clear 46.31 or not, I don't know. But if it can, then it's probably back up to the races. Those races taking you about 48.89. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome Welcome back, folks. So tonight for your viewing pleasure, you've got Nashville against St. Louis, and you've got Edmonton against Anaheim. I'll probably be snoozing. No, I won't be snoozing. I got the old soft shoes on tonight. Just start dancing like at around 9:30. But probably won't be watching that Edmonton-Anaheim game out there. But it's been like forever. I don't know how long it's been. It seems like a decade or more since Edmonton has been in the hockey playoffs. Many, many years ago, I had a couple stores in the West Edmonton Mall. It used to be the largest mall in the world. Then they built the Mall of America. That became largest. And by now, some guys, they build large. Who knows if it's, where it's even at in the largest malls. But the cool thing about the West Edmonton Mall, for those of you that have never been up there, many cool things, actually. But they have a hockey rink inside of the mall. Now, that hockey rink, at least back in those days, the Edmonton Oilers used to work out there, which was really great. I mean, you're talking in the middle of a mall, or a portion of the mall out there. So good old Wayne Gretzky's the great one's original team out there. So hopefully I hope that they do well. I don't know. Anaheim is a great team, that's for sure. Okay, enough about hockey out here. There was a question that was posted inside the den, and Mr. Bill, I don't know that I really got the gist of the question, but it was the question, I'm just trying to find it here. Could I discuss when a less relative strength signal is negated in the IWM? And I don't know what you meant by the relative strength signal there. Oftentimes you and I talk about, or we speak about, when the Russell 2000 is outperforming the 1000. That's what you like to see in bull markets. In the last 2 days, we haven't seen that, by the way. It's turned down. So maybe that's where it's coming from. I'm not really sure. But the way that it is, in essence, I think that you're asking the question, I hope I'm getting it, with regard to, does it mean anything just yet? I've got to take a look at what's really going on inside the daily chart as well. And when I take a look at this daily chart here for the Russell 2000, which had a very strong move, we put it on a weekly basis for sure, very strong move. The mere fact that price is pulling back today, no big deal out here, not until it gets below Stevie's red line, because the price oscillator is above zero. So this could be nothing more than just a setup for a retracement into an IWM that wants to go ahead and make an A to B equals CD to the upside out there. So that's the way that I have to take a look at it now. The other thing that I would just simply be doing for, and maybe you're short this, I don't know, but I'd also just be really focused on what the Russell 2000 equity futures contracts are doing. Here's the 30-minute chart. We'll punch this up on the screen. And as we speed out, this is a 15-minute delay here. But we can see that this also formed a little TD setup 9 count out here inside of, well, no, it's not really inside of bar number 6. So this could have some momentum, continued momentum to the downside. But I wouldn't chuck it all inside of the Russell 2000. If we take a look at the IWM right now, and we'll put this on a weekly basis out here just to kind of get a feel for what does the session really look like. It's still a gap to the upside. And volume-wise out here, let's just go see what it's doing, by the way. The volume matrix, or metrics, 161 million shares back a couple of weeks ago, February 27th. We're at 146 right now. I don't know what end of day is going to look like, but it's not exactly like it's pushing with super light volume to the upside inside the Russell 2000. Well, folks, it's been a great week. I have a wonderful weekend. Stay tuned, because your favorite polar bear in mine, David White, is going to be up next. Those of you that are subscribed, well, no, you don't even have to be subscribers. Every single person out there this weekend, if you've got some time, go to your members page. Go watch that 30-minute workshop, How to Spot a Bear Market. I promise you there's a set of tools there that you will appreciate. And you can subscribe to Mastering Probability. You can test drive that for free. Just come up with the homepage at TFNN.com. Go to newsletters, trading newsletters, and click on Mastering Probability. Great weekend, folks. We'll see you on Magnificent Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.